periods of inflation, goods and services increase in price, making it difficult for some consumers to get what they need. But how has the crippling inflation affected real estate and investors? Well, stick around to find out. Hey everyone, it's Alyssa here from Bay Property Management Group, your local property management experts, here to help owners throughout Maryland, Virginia, Washington, D.C., and Pennsylvania get the most from their rental investment. Before we get started, be sure to check out the link in the description below to our blog, which offers the latest industry news, plus advice and tips for rental owners, investors, and tenants. So with that said, let's jump into today's video. Inflation is the rate at which the cost of a good or service increases over a period of time, typically a 1-year span. While prices can differ depending on the situation, inflation commonly occurs due to the actions taken by the Federal Reserve. Overall, when more money becomes available, the purchasing power of the dollar decreases, which in turn increases the price of goods and services. Unfortunately, inflation affects most products and services, including real estate. There are a few ways the money supply increase can affect consumers. For example, in a demand pull effect, the increase in the supply of money creates an increased overall demand for goods and services. In other words, when you have more money available, it leads to higher spending and increased demand for products. Another cause of inflation can be the more expensive production processes of goods and services. When a product is more costly to make, it causes the product's price to increase as well. Inflation impacts real estate in several ways. For example, the cost to build a home increases significantly because of rising wages and more expensive supplies and materials. Investors have had a hard time finding reasonably priced investment opportunities to expand their rental businesses. When inflation causes interest rates to rise, money becomes more expensive to borrow from the bank. In turn, this can cause fewer investors to finance or purchase rental homes at all. However, the increase in rental home demand has allowed current landlords to raise rental prices, which has created an affordable housing crisis. That said, there are still ways for investors to invest during times of high inflation. After all, investing in real estate is extremely dependent on the housing market and the property location. When inflation is high, it can be hard to decide which investments will be worth it. Although mortgage rates are also high, investing in rental properties can pose many opportunities. For example, the demand for rentals is high right now, so in theory, there's less chance of extended vacancies. Additionally, landlords can set the rental rates according to their property location, extra amenities, and rates of inflation, so as not to miss out on profits. All in all, it is worth noting that rental properties tend to do well during periods of inflation. One important question investors have is, can real estate protect against rising inflation? And if so, how? The answer is yes, it can, in some cases. For example, landlords can charge more for their properties during periods of high inflation while paying the same mortgage payment, in turn potentially generating more profit. A few other ways real estate can protect against inflation include the effect of inflation on debt. When the home prices increase, it lowers the loan-to-value ratio of the property mortgage debt. In other words, the rental property equity goes up, but your mortgage payment remains the same. Property values increase over time. Historically, property values tend to increase over time, so your property may be worth more in the future despite inflation. If you're an investor and eager to purchase more rental properties this year, there are a few things to consider. First, it's essential to keep up with the market trends and use helpful financial strategies. In addition, follow along with these tips. Number 1, take a look at your finances. Before you think about buying a rental property, it's crucial to step back and look at your finances first, especially in times of financial uncertainty and inflation. Number 2, consider BRRRR financing, or buy, remodel, rent, refinance, repeat. It's a financing strategy that can give investors the opportunity to build a solid rental portfolio. Although it takes some time and effort, this type of financing is a great way to earn income while expanding your rental business. And number 3, buy when you feel ready. Finally, it's important to make large investments when you're ready. If you're not in the position to make a real estate purchase, wait until you can develop a solid investment plan and feel confident about your decisions. Navigating inflation's impact on real estate can be challenging for investors and property owners. Understanding the market and deciding when to buy all while running a rental business can be difficult for investors to handle alone. Luckily, partnering with a local property management group can help investors get the most from their rentals during challenging financial times. For more advice on a variety of other issues important to the rental industry, subscribe to the Bay Property Management Group channel, and don't forget to hit the notification bell so you never miss out on exclusive content. Also, be sure to check out our blog via the link in the description below for tips on choosing a viable rental market, along with everything from home maintenance to financing your first income property purchase. If you like this video, please give it a thumbs up or leave a comment down below. Thanks for watching, and we will see you in the next video.